Welcome back. You tune into Market Fatafat, where we are taking you through all the stocks that are in focus today, either on the back of news flow or on the back of technicals. And now on technicals, we are joined by Chandan Taparia, who's the derivatives and technical analyst at Motilal Oswal. And from a research team, we are joined back by Gaurav. Hi, good afternoon, Chandan. Welcome to you. Now, let's start with the first stock that you picked out for us. IGL is the name. Well, of course, there is a fundamental news flow also coming in on these counters, IGL, MGL. But on the charts, tell us, how does it look like? It has given some good returns in the last 1 month. In fact, after consolidation of 6 months, it has moved up some 23% in the last 1 month. From here on, what's the upside? What are the levels that you're penciling in?
Yeah, good afternoon. Thanks for having me. So ISEL has seen a decent run up in last couple of weeks from 315 to 400 zone. Stock has seen the decline in open interest, which indicates some short covering. We have seen buying in gas distribution sector, and the stock has given a consolidation breakout above 390 zone. If it manages to hold 400 marks, then further up move could be there. So one can buy with support of 388, and IGL can head towards 420 to 444 zone.
Okay, so that's the levels to watch out for on IGL. Let's move on, talk about BPCL. That stock was also holding up pretty smartly. BPCL shares saw a sharp uptick in trade after the oil major announced that it was set to commence pre-project activities for setting up of a greenfield refinery in Andhra Pradesh. Now, BPCL will set up a refinery and petrochemical complex in the east coast of Andhra Pradesh for an estimated cost of 6,100 crore rupees. The pre-project activities consist of various initial studies, land identification and acquisition, the preparation of detailed feasibility report, the environmental impact assessment, basic design, engineering, front-end engineering as well as design. This is what the firm has said in the exchange filing, and this is what we are understanding when it comes to BPCL. The stock had gained pretty sharply when this news flow came out during midday, but nonetheless it's settled some bit from the highest point, but nonetheless trading with gains of almost 1% in today's trade.
All right, moving on from BPCL to Tata Group of stocks that are in focus today. In fact, they have jumped Tata Investment, Tata Chemicals, Tata Motors has trumped Adani Enterprises to be the top Nifty gainer right now. They're all up 12, 6 and 3% respectively after the group initiated work on the mega 15,000 crore rupee IPO for Tata Capital. Now, its flagship financial service arm, the IPO preparations term as Tata Capital, a systematically important NBFC, complies with the RBI directives for upper layer NBFCs to list by September 2025. The offering is expected to raise over 15,000 crore rupees and will include a mix of primary and secondary share sales. On the back of that, the entire Tata basket is in focus today.
Okay, so that's the reason why Tata Group of stocks are doing pretty well. But Gaurav, coming to you, real estate has been doing well recently. Oberoi also in focus on the back of that news flow of the land acquisition. You've picked out Prestige Estates from us from the same pack. Tell us what's keeping this stock in focus today, slightly under pressure.
Now that we are seeing that the stock is actually slightly under pressure, but in the morning it was up in trade today, and the reason being that as per media sources, company is in talk for 7,000 crores worth of redevelopment project which will be in Mumbai. So this will be one of the biggest projects in Mumbai. And when we talk about this project, now there are 19 housing societies under Mumbai's Bandra area with a gross development value of 7,000 crore, and that is the reason why that is the project what Prestige is actually focusing on. Prestige will handle, design and construct the entire project, while other groups like RC Group and Valor Industries will manage the approvals and coordination. The construction is likely to begin in 2025-2026, and it is expected to get completed in the next 4 years. Now, when we talk about Prestige, currently it is in advanced talk for the project, and as per media articles, although the Prestige has actually declined to comment anything officially, but on the back of this news flow, we saw a positive momentum coming up in the stock price. Currently, as we are speaking, the stock is under pressure, but on the back of this news, we will be watching out on Prestige.
All right, that's Prestige Estates. But moving on, Chandan, Dr. Reddys is the name that you've picked out for us. Chandan, tell us, what are you seeing on the chart for this counter? This one has done pretty well for itself. In the last 1 month, we've seen an up move of 12%. Is this stock headed now towards its 52-week high, and what are the levels?
So we have positive on the most of the defensive name, including pharma, and Dr. Reddy is one of the strongest name, which rallied by more than 15-16% YTD basis, and also rallied well by more than 12-13% in this month. So a decent recovery is clearly visible on the price behavior. Even on the daily chart, it has been moving upwards from last couple of days, making high tops, high bottom. We witnessed some profit booking on the last day, but even after that, higher low sequences clearly intact. So with support of 1300, overall we believe buy on decline stands for a target towards 1500 in Dr. Red.
Okay, so that's the view coming in on Dr. Reddys Labs from Chandan today. But let's talk about SBI Card in focus on the back of two reasons. First, the credit card data, and then second, you have a brokerage note also coming in. Now, a bunch of other stocks, the likes of ICICI Bank, HDFC Bank, IndusInd, are in focus on the back of the credit card data. But let's focus on SBI Card because credit card spends in East post the festive season. November saw a drop of 16% month on month to 1.7 trillion due to the moderation in spending after strong festive demand. SBI Cards lost market share by 90 bips on a month-on-month basis when it comes to spends. However, when it comes to credit card issuances, SBI Card had market share gain of 20 bips, coming in at 18.7%. Now, while that's the news flow coming in from the credit card data, let's also focus on what the brokerages have to make of this. And Morgan Stanley has maintained their equal weight rating with a target price of 650 rupees. They believe SBI Card's November spending market share has fallen month-on-month to 14.9% compared to 15.8% in October. Spending has fallen 20% year-on-year on an industry level, but has increased 5% year-on-year, reflecting ongoing impact starting February of the RBI notification on corporate card spending. Market share in number of credit cards in force stood at 18.7%, and aggregate daily spending was up 8% year-on-year in December versus 4% in November. So mixed numbers coming in for SBI Card, mixed outlook also coming in, slightly positive. The stock is up 0.5% as we speak.
Alright, moving on then, Chandan, coming to you, you have picked out the high flyer trend which has doubled in the last 1 year. From here on, what do you see, on this counter? What is the upside? Is there more upside, and how does one play this counter?
So in technical, we always say trend is your friend, follow the trend till it's not bent, and trend is intact, and trend is continuously holding well from last 11 years, and this is the strongest year where it rallied by more than 130%, and I believe this momentum could continue. However, we have seen profit booking decline in last 2 months, mainly in the October and the November, but those declines were both. It took higher base at 60-200 zone, and now even the supports are shifting higher at 67.50. So with support of 67.50, we suggest to hold the long position, and this stock can head towards 7300 to 75.50.
Okay, trend has been a higher fly when it comes to the entire consumption pack. But while we are talking about the consumption space, there's also revisit an expert voice. Now, there are several good consumption bets according to Anand Radhakrishnan, the managing director at Sundaram Mutual. Let's go across and listen into which stocks he is lagging from this entire consumption basket.
While the basket of consumption has evolved over time and the new growth sectors in consumption has come, as long as we are aware of that, I think there is still reasonable investment bets that can be made. Maybe it is instead of certain kind of old consumer staples to certain discretionary consumption or new kind of consumer staples one can bet on and try to make money. Now, third, of course, thing is this nagging worry that the middle class is not having enough disposable income, or maybe their income is not growing at a level which can support more and more consumption at that kind of a thing. I think it's a lot of thing is a little bit of overblown worries, but while in the short term we may have seen that trend, I think maybe because of the job creation in the IT sector is low and few other sectors we are able to see significant recruitment trends. But we think at the margin things are changing for better, both on the urban side as well as on the rural side. And maybe in the second half of 2025, we will see consumption come back, and one can possibly look to find some good investment bets in that space.
Right, moving on then, coming to you now, Gaurav. Greaves Cotton is the name that you have picked out for us. Tell us what's the news flow here.
Cotton is in focus, and the reason being that now EV maker Greaves Electric Mobility, who is also wholly owned subsidiary of the company, has filed their DRHP for their IPO. Now, as per Greaves Cotton's exchange filing, company is going to raise around 1,000 crore rupees, which will comprise of a fresh issue. Let's also understand how they are going to issue these shares. So, as per the exchange filings, they will be issuing share of ₹1 each face value, and at the same time, for offer for sale, there will be around 51 million shares from the company which they will offer for sale. sale during the same IPO, and there will be around 138 million shares from the investment group, which is Abdul Latif Jameel Green Mobility Solution DMCC. So this is the structure currently that we have for Greaves electric mobility. Now this company is also known for its vehicles, e-scooters and three-wheeler vehicles. We have their famous brand Ampere, which was in the e-scooter segment, and let's also not forget that Ola Electric also recently came up with the IPO, and we saw a huge response coming up for the company. And on the back of this, when we talk about Greaves Cotton also, given that their e-mobility subsidiary is coming up with IPO, we are seeing a sharp spike in the stock price of Greaves Cotton.
Okay, Greaves Cotton doing very well in today's trade, roughly 13% uptick coming in on that stock. But on that note, time for yet another breather on this edition of Market Fatafat. We'll slip into a short break and be right back and take you through more buzzers in today's trade, so you stay tuned. Hi there, welcome back to Market Fatafat. Let's keep it going with all the stocks that are in focus. And now let's talk about an entire pack of stocks that's in focus today, and that's the defense stocks, the likes of HAL, BEL as well as Bharat Dynamics. On the back of two brokerage notes coming in. First up, let's see what Elara Securities has to say. They expect fireworks when it comes to the defense space in Q4 as indigenization is up. The contract awarding to jump multifold in the next 2 to 3 years is what they're seeing. India's defense imports have dropped by 1,100 bips to 28% in FY24. Getting stock specific for Hindustan Aeronautics, they maintain a buy with a target price of 5,465. BEL maintained a buy once again with a target price of 345. Bharat Dynamics, however, they've downgraded to accumulate from a buy rating, but have hiked the target price to 1300 from the earlier 1230 rupees per share. Let's move on, talk about Phillip Capital's view on defense. They believe that margins from the core defense products are expected to expand. They maintain a positive outlook when it comes to the sector. They've initiated a buy coverage on BEL with a target price of 390, initiated a buy on HAL as well with a target price of 5,500 rupees, and initiated a neutral coverage on Bharat Dynamics, the target price of 1,400 rupees per share. Two brokerage notes coming in on the defense sector. These stocks are trading slightly under pressure as we speak.
Alright, coming to you then, Chandan. Siemens is the name that you picked out for us. Now, this counter has been in a corrective phase in the last, this counter has actually, what are you seeing on the chart for this one? Because in the last 3 months, it has been down, 7-odd%. It has been in a corrective phase. So from here on, where does it go?
Yeah, so Siemens is one of the weakest structure which fell down sharply in last 5 to 6 trading days. It corrected from 8,000 to 6,600 zone, and if it holds below 6,550, then further downside move could be there. So the stock is finding a threat of the breakdown. So I believe with hurdle of 6,750, it can go down to 6,200 or even 6,000 marks.
Alright, possible breakdown on the Siemens to 6,000 levels. But moving on to the life insurance space, SBI Life, ICICI Prudential, HDFC Life, all of them are in focus today on the back of the data that's come out by IRDAI. According to that, the insurance penetration in the country has slowed down from 4% in 2022-2023 to 3.7% in FY24, despite a strong push from the sector regulator to get the entire 1.4 billion population under cover by the time India turns 100. Now, decline in the life insurance penetration is what we are seeing, is one of the key indicators of the spread of insurance in the country. In 2022-23 too, it had declined to 4% from a previous 4.2% in the previous year in 23-24. The shrink was caused primarily by a dip in the life insurance penetration from 3% in 22-23 to 2.8% in 23-24, while the pace of growth for the non-life covers remained steady at 1% in this period. In the back of that, the life insurance players are in focus today.
Okay, so that's the reason the life insurance players are under the spotlight. But Gaurav, coming to you, you picked out Gulf Oil for us. The stock is also holding up to some decent gains coming in today's trading session. Tell us what the news flow is.
Gulf Oil is in focus, and the reason being that the company has now collaborated with Naira Energy to bring premium automotive lubricants and AdBlue, which is one of their products, to around more than 6,500 fuel stations nationwide that Naira has. Now, this partnership will see company's entire product range being made available across Naira's energy extensive network, and this strategic alliance is a part of 3 years contract. Under this collaboration, they will be exclusively selling their AdBlue product, which will be at a Naira's network. When we talk about both the companies, Gulf Oil also has has a very strong network. Gulf Oil operates in over 100 countries with more than 80,000 touch points. And when we talk about Naira, it is India's second largest single-site refinery with a capacity of 20 MMTPA, and they also have a reach of around more than 6,500 retail outlets. Now with this, the new partnership and new scope for sales, Gulf Oil is in focus, and as we speak, the stock is still up, although there is some kind of pressure coming up on the stock price, but definitely up in trade today.
Alright, that's Gulf Oil. But coming to you then, Chandan, Laurus Labs is the name that you picked out for us. Good returns that Laurus Labs has given. In fact, the entire pharma pack has done very well. 7% return in the last 1 month. From here on, where do you see the stock headed?
Yeah, so Laurus Labs is one of the strongest counter which is holding well even after the profit booking decline in the broader market. From last almost 10 days, it has taken multiple support at 556 zone, and small follow-up could lead to a fresh breakout. Even on the weekly chart, it has been forming an inside bar or giving a chance to fresh leg of rally. So momentum looks to start in counter once it holds above 577. So here we have a conditional trade setup. Buy above 577 with support of 562, and it can head towards 590 to 600 zone.
Okay, Chandan, that's your view on Laurus Labs. I'm going to come back to you quickly. Give us your take on what NMDC is also expected to do on the charts. It's been a series of red coming in last 5 days, 1 month, 6 months. The stock has given negative returns. What's the outlook going ahead?
Even NMDC, it has been making lower top, lower bottom on the daily chart. Even on the weekly, the stock is trading at multiple months low level. It is also forming an inverted ball and flag pattern, which has negative implication on bearish sentiment. So if it holds below 210, it can open the downside to 200 and 195. So small follow-up in the selling can take the stock down by 5 to 8%.
Alright, moving on from NMDC on the charts to KFOR. Tell us, Gaurav, what's the news flow here on this counter?
And the reason being that as per agencies, company is an advanced talk for its merger with Cigniti Tech. Now what agencies are suggesting is that EY and Axis Capital is preparing term sheet for shareholders approval. When we talk about the entire deal, KFOR is planning to absorb Cigniti, with shareholders receiving KFOR shares based on the determined swap ratio. Now when we talk about KFOR, the market share market capitalization has more than doubled over the last 7 months. It is now standing at 62,000 crore rupees. When we talk about KFOR, it was formerly known as NIIT, and it already owns around 54% stake in Cigniti Technologies. KFOR actually announced this acquisition on 2nd May, and after that they also came up with a QIP to raise around 2,240 crore rupees. Now the synergy here is that KFOR's clients in North America are largely located in East Coast, where Cigniti have customers, and that is the reason the synergy might be met there. And as a result, now that the stock is under pressure, but definitely watching out on KFOR on the back of this positive news flow.
Okay, so news flow is positive, stock slightly under pressure, nonetheless 0.3% cut coming in. On that note, before we wrap up the show, let's just quickly revisit what the Nifty is doing. That fall seems to have intensified for the Nifty below 23,750 mark for sure for now. 23,726 is where we are off the day's highest point of 23,867. But that's it on this edition of Market Fatafat. Thanks so much for watching. Closing trade takes all the action forward.